Hey everybody, this is Jim at SP500chart.com. I'm going to do a little, I guess what I would call an educational video in technical analysis of stock trends using the chart of U.S. Steel. This is purely for educational purposes only. Nothing stated at the website SP500chart.com or in the video is intended to be used as investment advice. Look, I can draw lines on charts, but you have to draw your own conclusions from your own research. You need to make investment decisions that are suitable for your personal financial situation. And I want to remind you, or in case this is the first time you've heard my voice, let you know for the first time that I'm not a licensed financial professional. I'm just a guy who draws lines on charts. Go to SP500chart.com. We do a daily S&P 500 video after each day's close, and then we do a review at the end of the week that's released over the weekend. So go check that out. It's a subscription service, but it's cheap. So look, let's take a look at this chart. Okay, this is a monthly chart of U.S. Steel, and this chart, the monthly chart means each candlestick you see on this chart, and in case you don't know, a candlestick is each little vertical segment in this chart. Each candle is what U.S. Steel did in price movement in a month. Now, you're looking at this chart right off the bat, and if you are a savvy chart reader, you're probably already concerned. You're going, whoa, 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 what are you doing using an arithmetic scaled chart? Okay, and that is a perfectly legitimate concern. I'm doing it to illustrate. When we look at this chart right here, it makes it look as if U.S. Steel is just going along for a decade doing nothing. Then all of a sudden it just gets into this parabolic move up. Then it gets slammed down to back in the same area where it was doing nothing. And while that is in some ways true, when we analyze stock charts, we typically do not want to do so on an arithmetic chart. What does that mean? An arithmetic chart means that each quarter inch you go up on this chart is equal to the same number of dollars no matter where it is. In other words, if you move up a quarter of an inch and it's a $9 move, it doesn't matter whether you went from 180 to 189 or from 9 to 18. Now obviously, going from 9 to 18, that's a double. Going from 180 to 189, that's about, what, a few percent. I mean, it's a nice move, but what about 5%? So let's change our chart to a logarithmic chart. Now watch what happens to this chart. All of a sudden, now we see we see a better relationship of price movement, because now the same distance on the chart represents the same percent gain. Okay? So now let's just take a look at this chart. And a couple things I want to show you is that starting in the late 90s, we're going to draw a trend line that shows that U.S. Steel was in this descending channel that lasted for quite a while. And it was fairly well marked, and it's almost perfectly parallel. Not exactly, but very close to being a parallel channel, which is a fairly typical thing to see in a logarithmic stock chart. And what that means is that people have a tendency to buy and sell based upon the same percentage gain or percent loss. So it was down in this channel for about 1, 2, 3, 4, 5 5+ years, and then it broke out of this channel. Now look at that. Here's this top line. Let's make this green. Once U.S. Steel got over this line, it started a very impressive rally that lasted for 1, 2, 3, 4, well, actually off the bottom here, more than 5 years. Now let's zoom in to a 9-day chart and see if we can make any sense out of what happened during this big period of price appreciation. Well, lo and behold, we can. We see that as U.S. Steel was going up, it had a tendency after a while to bounce on this line right here. Just to make this a different color, let's make it red. Okay? Then we entered the crash of that actually the top for the S&P actually was put in late 2007, but the top in U.S. Steel did not occur until the middle of 2008. And look at how much it gave back of all of those years of gain within less than a half year. But what is interesting, if you look where it started to bounce, let's put a horizontal line right on this level where it bounced. And you find that that pretty much correlates with where it broke out from this descending channel. So it's almost as if this area of breakout where this channel was taken out to the upside, this area never got revisited until more than 5 years later. And once it did, all the folks that said, man, I missed that run in U.S. Steel, they probably were thinking, you know, now's my chance. I remember back in 2003 when U.S. Steel was only trading for about $17, and then it went up to $175. Man, I missed the boat on that. If it ever gets back to 17, I'll buy it. Well, what happened? It got back to 17, and there was a decent rally in U.S. Steel. But here we are, we're back to 17 again. And the question is, does that mean that we are going to be looking forward to another rally off of 17? Well, I am open to that idea, but I need to see a couple things first. Okay, we are now looking at a 3-day chart, and I want to show you a couple other little things that worked out pretty well in U.S. Steel. Now, I will show you one thing that did not work out, and I can't go into all the details here, but U.S. Steel had made an inverted head and shoulders pattern back in 2009 that almost exactly mirrored the inverted head and shoulders pattern in the S&P 500. And sadly, for U.S. Steel, it all started to go south in 2010. Whereas the S&P has continued to rally, U.S. Steel took a turn down in 2010. This pattern should have produced a move back up over 100 in U.S. Steel, but it simply failed to do so. And that sadly happens from time to time. But we did get a recognizable pattern that took place that at least gave us a heads up to this last leg down that took place in the middle of 2011, and that is there was this symmetrical triangle pattern that this stock was bouncing around in for for about a year and a half, and that broke down in 2011, did a little back test, and really has been terribly weak ever since, just pitifully weak. Now, when we look at these consolidation patterns, and when we look to establish a price target, when we come out of a consolidation pattern, we do so by measuring the height of the first reactive move in the pattern. And what I mean by reactive move is the first time you hit the top of the pattern, if you're approaching it from below, you drop a line and you measure that distance. Then, when the pattern breaks down, you add that distance onto the area of the breakdown, and you know to expect at least a sell-off in the case of the breakout being a breakdown. You know that U.S. steel, once it broke trend here at about 44, you would know to expect a move down to at least 22. Now that's minimum. In the case of U.S. steel, it did more than that. It sold off more than that. But now, so that's an interesting pattern we have right there. Additionally, when we made this initial bounce right here, another little pattern developed, where for about 5 months or so, we were in this little ascending pattern that converged. This is a bear wedge. And when you see this start to happen in this shape, then that's a heads up. It's probably going to give way, and the net result will probably be, in the case of a bear wedge, the tendency is when the price action falls out of that wedge, it has a tendency to go back to at least retesting the low that was in place prior to where that wedge formed. Now, another interesting thing. So that happened. Here's the question. When will U.S. steel potentially be a buy? And I've got a couple things to show you. Okay, here's the first thing. We're going to take this top that was in place back before this triangle broke down, and we're going to extend it over the next highest area that we meet. In other words, if I do this, and I'm looking for a significant top. I'm looking for a place where U.S. steel rallied up to and then sold back down. And the first one we find is right here. So now I'm going to say, well, here's one piece of evidence that could be pointing, let's make that green. Here's one piece of evidence that could be pointing that U.S. steel is in the process of turning around and potentially forming a bottom here. But that's on when we're looking at a smaller scale, when we're looking at a 2-day chart. Let's back up. Let's look at it on a weekly chart. Now let's go way up here and extend this line over that same starting top, and you can see that line has not been broken. So what that means is I would expect in any rally for this line to put up something of a fight. The other thing I would look at now, let's go in and look at it on a much smaller time frame. Matter of fact, we can actually go in and probably look at this on an hourly basis. Well, maybe not quite. Let's go to a 2-hour chart. And you can see that at one point we were up around 26. Now we're down to 17 again. Is there any clue that we might get that could tell us when this short-term trend might be reversing? Well, that's about all we got right there. Then we could even go to this point and this point and ask ourselves, if this line breaks, that would reverse the trend that has been in place for the past 2.5 months. But you know, I would be looking for something a little bit more along the lines of, when this line breaks, then that should tell us that U.S. steel is done with this serious sell-off. Because you can see, if we back out now to a 9-day chart, isn't it interesting? We have a line going up that is matched by a line of almost an exact mirror image coming down. When this line broke after it was going up, it really created all of this selling pressure and wave after wave of selling. And even though that was an impressive rally from 17 to 60, about 65, that was a very impressive rally, but it didn't have staying power. So at this point, if U.S. Steel could get over this line right here, I'll make it a darker green, then I would wait for a back test of that line, and that might be a good place to buy some U.S. Steel. Hey, thanks for watching the video. Take care. Come on over to sp500chart.com. Check it out.